Well, it wouldn't be retail if I didn't say Amazon, and then I'm also going to say Tapestry, which is the Coach, Kate Spade, Stuart Weitzman family of brands. The reason for these, I think there's been a massive amount of fear as it relates to global multinational companies coming out of Asia and the rhetoric in terms of what's going to happen to the stocks that have multinational presence. And on the flip side, up until this past week, there was an incredible amount of comfort on the U.S. consumer and the U.S. department stores. We want to take the opposite trade. So I think what has happened is there's a lot of inventory on the floor. It's Black Friday. We're seeing promotions. Those are not going to stop. And the flip side, I think some of these other companies and these other stocks have been way too battered. And over the next year, not for the next month, but for the next year, I think that's where you want to be.
Would you be positive on Amazon if it hadn't pulled back off its highs?
It's an interesting question. If it hadn't pulled off its highs as a company, absolutely. We've pulled well off our highs, so I get to answer that from where the stock is today. So based on where it is today and the information we have, sure thing. If the stock was $2,200 today, it would probably be a different conversation, but I would still think there's an incredible opportunity for Amazon, the company. One thing we've spent a lot, my team and I have spent a lot of time on vis-a-vis Amazon, is the reality that they're becoming much more mall, less retailer. So they are now a fee collector. And what that does, it's really interesting and it's important, and it's going to be a hard pill to swallow. But a fee collector has lower sales, better profits. And ultimately what that means, we're going to stop a year, 2 years out already. There will be a mathematically higher margin. There will be better profits from Amazon because they're just collecting fees. And what's happening right now is in any stock, you need to get comfortable when sales slow.
I thought, Simeon, you were going to say a Nike or a Lululemon or an Under Armour, not just because that's what we always talk about back and forth, but also that's what everybody likes right now. It's cold weather. They benefit from the cold accessories. And sports is still seemingly in an up cycle. Consumers are still going there.
So absolutely behind Nike. I was trying to find a good deal. There are some, there are not. At the end of the day, if we look at the stocks, Nike has held in relatively well. So it's off of its highs, but it hasn't been demolished. Some of these names, some of these stocks have been demolished. And they've been really hurt on the idea that Asia demand is going to slow, that costs are going to go up. And I think that the reality is, from what every company is talking about, it's overblown, but it's a fear that's hard to dispel. And as long as there's that cloud of fear, stocks get hurt. That slows down next year. And I think we start finding out that the reality, there will be some pressure to include, but it's not going to be as bad as people think. So still like Nike, still think there's a lot of interesting things happening across the athletic sphere. But the reality is it's going to be that aspirational luxury. Yeah. It's going to be handbags. It's going to be these companies that have really seen a beating, not because they're numbers, but because of fear. And it goes to Wilfred's question about Amazon. At the end of the day, and we always talk about this, right? The difference between stocks and companies. Right now, we're talking about stocks.